Hello everyone, I hope you guys are having a wonderful day and making some really good trades as per usual here. And right now, let's dive right into it. And doing the video a little bit earlier today, give you guys a bit of a head start, get some good sleep, and because tomorrow the CPI is going to be coming out and you guys want to be ready for that. And today we had a very nice update in the markets, up 57 basis points. QQQ up 68 basis points. The IWM flat to negative. But if you guys don't know, the IWM had a pretty big drop today. It was down almost 98 basis points, I believe, or basically an entire percentage point, and recovered all of those losses. So you can see all that buying came in, just trying to stop people out, chopping up those traders before the move continues up. So my best guess is that this is going to continue higher before we start to see real resistance in the market around 510 to 540 on the SPY. And again, this is a very big range. Just because we reach 510 doesn't mean we can't go up another 6%, right? So again, this is my target for the S&P. Once we get to these levels, I'll be looking to exit some positions and potentially start to look for shorts, even more shorts, okay? So right now, diving right into it as well, let's take a look at the SPY on Market Cipher on the daily time frame here. And we have a 17 and a -5. So again, this looks like the continuation is going to, continue. The uptrend should continue. We have very bullish dual band strength index numbers. Looking at the daily time frame on the wave edge indicator, we don't have any negative signs here. We don't have any red crosses or any sell signals. 4 hour, nothing there. 1 hour, I think we got a couple red crosses, but those were also negated because this is such a strong uptrend. We are coming from a very strong uptrend, and there's buying opportunities all over the markets. Taking a look at GME, there is a nice little trade set up right now on GME. We took that trade today inside the Discord. So if you guys are inside my Crypto Mickey Discord, you'll get access to those trades there. But I am implementing a new system to post those trades in Hedgeline Trading Discord as well. But overall, we came to the 50% retracement here from the wave one, and that gave us a nice little, pop down. The C leg has technically reached its minimum requirement for a target at the 50% retrace, and now we should reverse back up. How high we're going to go, that's really up to the markets, what we're going to do here. Tomorrow's that CPI number, so this is going to be a very big market moving event. If it comes in lower than expected, the markets are going to be happy. Higher than expected, this could end the rally and send us lower down to 453 to 460. So if we get bad news tomorrow, you could very well see the markets lose their footing and start to come back down. But looking at the 4 hour, we already have a clean break on the downsloping trend line on the RSI. So you actually are looking to potentially think you're actually looking to not short this right now. You'd really have to wait for confirmation and this fall below back the RSI trend, because if anything, if you're trying to short this before confirmation, you could just be getting in front of a train, which would be the wave 3, right? And you don't want to get in front of wave 3s. But yeah, so if this is it, then we missed the ABC. It was a very small ABC correction, and the wave 2's in, and you're going to continue higher. Right, so again, don't get me wrong. I am very bearish on the economy and the markets as a whole, but now is not the time. And the reason for that is, we can see that inflation is coming down, and most likely the economic numbers are going to deteriorate as well. But the market right now only cares about interest rates going down. So every time they see negative economic numbers, it screams positivity for the market in the short term, because it will force the Fed to lower the rates, because they've done too much damage to the economy. And once they do lower rates, right, to 2%, maybe even not even as low as that, maybe they only reach 4%, right? Who knows what they're going to get down to. But once we do reach that trough in the rates, which I expect, in the 20-year yield, maybe right around 3.6%. Once we get down there, then yes, that's when the market is going to take a look at the economic numbers and say, oh my God, why is everything deteriorating so fast? Why are earnings doing so horrible? Then you may very well have a capitulation in the markets, right? So that's probably why we can reach these levels here in the market before we really start to go lower. And looking at the monthly time frame on Market Cipher, looking at the SPY, it's looking like a continuation towards the upside. So there's nothing bearish about this market right now. It's not the time to be bearish. It's just, you know, it's by the, essentially it's by the dip as far as I can see. But, you know, don't get me wrong. There will be market moving event. There's going to be a capitulation event. And when that comes, you really want to be on the right side of things. You don't want to be on the wrong side of that trade. All right. But yeah, that's basically it overall. Let's move on. We'll take a look at some individual names here. We'll cover ROKU as we usually do. Very, very popular one, highly requested one. So ROKU actually had a bit of a down day today, down about 2%. I still think that ROKU could technically be in this C leg here. And I think if you get a big downwards move tomorrow in the markets, then you could be starting the wave 3, right? You could start the wave 3 down. Our target is going to be between $78 and $70 for the C leg to finish up in a 5-wave move down. This, you can see how well some of these, this technique works for Elliott wave. This was our sell area for ROKU for us to reach about 108 between 115, and we just tagged this level. You know, you can take a look at the intraday. We tagged it here very slightly, and we tagged it here, you know, a tiny bit as well, and then we just got rejected both those times, and the price retraced, you know, immediately. So you can see selling pressure is there. And I gave you this target when we were all the way down here at, you know, $80. So again, that's a huge move in ROKU. That's a 35% move that we anticipated there. Now what I'm anticipating now is a downwards move here for our C leg, but it doesn't mean that we have to reach it, right? Elliott wave is not always 100%. It is subjective, so things can change, right? Maybe this was the A wave here, this was the B wave, and we just finished the C leg here, and what we're starting is a whole new cycle higher. So there's all sorts of possibilities, but that's why we try to map it out to our best of our ability, right? So that's essentially what I'm seeing right now on ROKU. When we take a look here at SBUX, another very popular one that is highly requested, it is in the buy area at the moment. So SBUX in the buy area. We are going to be looking for this move to start coming out. If you see an impulse out, so if you see a bullish move in the markets tomorrow, then in that case, that means that this leg down here is finished, and you're going to be starting the wave 2 retrace of a larger move, which is going to be, you know, it's supposed to be going down to these levels here at like 57.43, but that may not happen for another year because this is a very large cycle, you know, pattern that we're playing here. So in the short term, in a couple of weeks that come, in a couple of days, I don't know how long it should take. My best guess is in a couple of weeks, in the months that come, you should be coming back up to the 102 area. After that, you can run into some resistance. All right, let's move here and we'll take a look at Apple and NVIDIA. So again, Apple getting a very nice update as well today, up 57 basis points. The move continues higher for Apple, and I expect it to come back up to the 192 area, at which point we'll probably start to see some resistance again. That we did get into my sell area at one point, but we did get over it, and that's why I no longer like the short position, and that's why you stop out and you wait for your next trade opportunity. All right, so that's basically it. We can take a look at NVIDIA. So NVIDIA continues its move higher up to $543.50 now. So it is in price discovery. It is going parabolic, lots of FOMO, lots of euphoria, and this can go on for a while, right? So again, it can reach 600, maybe even higher, but at that point, you'll probably get a market moving event, a retrace. We'll have to see how earnings are in February, because that's really gonna dictate on how the semiconductor industry is doing, as NVIDIA is probably the leading one in the market. Sort of like how Tesla is the leading EV right now in the market. Let's take a look here at oil and natural gas. So we'll cover our commodities as per usual. So oil, bit of a down day today. It's kind of just chopping sideways at the moment. We'll just delete this to see the wave 2 should be finished. If we're starting to come back down, it should be any day now. The C leg, the third wave of essentially a 3 of 3 should be coming back down and breaking this pivot here at 67 and 74 cents. Once you take out this pivot, that's your first indication that the move has started, and we are really going to get a very big push down. We're most likely going to crack $65 a barrel, and we're going to start to make our way down to 60. Okay. Let's take a look at nat gas. So nat gas, very overbought now. I mean, in my opinion, it's starting to get not very overbought, but it's had a tremendous move up. Right? We faded the lows. We came back down, faded the lows. This is exactly what you want to see. And we pushed higher. Now maybe the wave 1 is finished, and you're going to start to retrace in a wave 2. And that's really what we want to be looking for as a buying opportunity. In my opinion, if you start to retest this upsloping trend line, you don't want to miss the move on natural gas. You want to buy in, and you want to hold for the long term, because this could be a very big move up in the third wave of a 3 of 3. Right? So those are essentially what you want to catch. 3 of 3 moves, and they're just, I mean, it's just amazing because you just ride the wave up and you let the market carry you essentially. All right, let's take a look here at the dollar. So the dollar was actually down today. So again, dollar down, positive for the markets when the dollar's down. Our Euro USD trade and S&P trade are doing very, very well on our Oenda account. We are currently up on all those positions, I believe, to this day. I haven't checked right now, but at the close they were up, but they can trade overnight, and right now the S&P is up 13 basis points overnight. Russell 2000 up 40 basis points. Okay, and let's take a look at the 20-year. So again, nothing much on the 20-year to really add. This is essentially my primary account. Could the B wave be in? Right, that's the $1 million question. Yeah, technically it could. I would prefer a retrace higher, something like this. Right, for the B wave to be complete, but again, it doesn't have to do that. It could be technically finished right now, and we won't see the rest of it. So I mean, that's really what it is. You just gotta be patient and wait to see how the market's gonna play things out. All right, so let's take a look here at gold and silver. So again, it's very similar price action. So I'm gonna be looking for gold and silver to be pulling back just a little bit here. Maybe down to the 1960 area, 1950 for gold. And for silver, I'm actually going to be looking for silver to come back down to the $20 area, or sorry, not $20, the $21 area from this upsloping trend line. And if we do break that and we manage to get to the $19 level, at that point, I would have to say that it's time to back up the truck and load up like never before, because silver is most likely going to break out as the dollar inevitably, starts to implode and drop like a crazy amount, because they are going to have to cut rates and they are going to have to print money. It looks like Powell is very weak. He is not a Paul Volcker. And if we do get a Paul Volcker event, then everyone loses. The markets lose, and gold loses. The dollar will gain in strength. The yields will rise higher. But that is a cause for calamity. So what do you really want to bet on, right? I've been very bearish for a long time, and I will remain probably bearish forever until they get their economic agenda in order, which probably will never happen. But anyways, in the long term, the markets will probably keep churning on as they provide liquidity in the markets and they continue to support it, right? So there's really no sense in fighting it. They've been supporting the markets since the banks failed in March. They said it's not a bailout, so they gave the markets a bailout without telling the markets that they're giving them a bailout, or telling the world that they're giving a bailout. So that's essentially how they're advertising it, and the market can continue to float up on light volume. We have decreasing volume right now, but we'll have to see how this one plays out. Right, we'll take our time on our trades. Light volume favors sideways price action or upwards price action. So this is exactly what we want to see for more upside. Anyways, hopefully you guys enjoyed this video, and I'll catch you guys on the next one. Thanks for listening. Peace.